Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. Bank Receipts Daybook, what it is and why we need this daybook. Manual bookkeeping, pen and paper bookkeeping. We're using daybooks, the books of original entry, also known as first entry or prime entry daybooks. We are collecting information from the source documents. What is a daybook? A daybook is a list of your transactions, invoices, payments written down in sequence in a book. In days of old, this was done daily. Each day sales were written into a book, so we get the term daybook. Some related daybooks: the sales invoice daybook, sales credit note daybook, and the bank payments daybook. Similar and related terms used: customers, debtors, accounts receivable, they're interchangeable. Receipts, money in, electronic funds transfer, EFT, payment, lodgement, all terms used in bank receipts. A daybook that might be imagined by you. What a modern daybook looks like. Big Red Book. Often these modern day books are referred to as Big Red Books. Why Big Red Book? Because some of these red books can be very big. Why are they big? Depending on how many columns you need. More columns, bigger book. Maybe this big. This book has 30 analysis columns. The columns will be very narrow in this book. Inside, an empty bank receipts daybook. Example of a bank receipts daybook. Bank receipts should eventually end up on our bank accounts and appear on our bank statement as shown. On screen, here is where our bank receipt details are recorded on our bank statement. Here is the bank statement with an explanation of some of the receipts. Money received directly into the business's bank account can only be seen when you receive a bank statement or gone to your online banking service. The 1st of January transaction is a lodgement made by the business. The owner gave the business a cheque and this was lodged into a bank account. The 15th of January transaction is an electronic funds transfer, EFT, made directly into your bank account. You won't know it is there until you get your bank statement or check your bank account online. Here are the bank receipts on the bank statement with the daybook entry side by side. You can see the information taken from the bank statement. Explanation of the bank receipts daybook columns. The date of the bank receipt, the payer or customer, the name of the customer or payer who gave you the money. Payer could be a bank loan or money from the owner. Reference. A reference to identify how the money was paid to you. Example, EFT equals electronic fund transfer, CHQ equals check. The total column. The total value of the money paid by the customer or payer. Totaling the columns. Any column that contains values must be totaled. By totaling each column, this allows us to see what the total receipts are for the day, the week, or the month. In this example, we are seeing the monthly receipts money in figure. This bank receipts daybook listed 3 bank receipts for the month of January. We have 3 analysis columns. Can we have more columns? Yes, add analysis columns as required, but don't go wild. Listing what came from customers and what came from other sources in separate columns makes it easier to identify where the money came from. The analysis will be used later when completing the general ledgers and customer ledgers. And that's how you set up a bank receipts daybook, and why this bank receipts daybook was set up as shown using these columns: the date, the customer, reference, total, customers, director's loan, shares. This is a bank receipts daybook layout. You can add more analysis columns if required. Thank you for watching.